looks at the newspaper and sighs. His friend Rohan asks him, "What happened?" Ankit says he has incurred a loss. Rohan asks him, "What kind of loss?" Ankit says his money was not invested, it was just lying idle in his savings account. Rohan tells him not to beat around the bush. He asks Ankit to tell him what exactly happened. Ankit says he had kept money in savings account. Rohan says having money in savings account is a good thing. If you had kept it at home, it would have been spent unnecessarily. Ankit then says, but if he had invested the money in a fixed deposit, he would have earned more returns. Like Ankit, have you ever made the mistake of keeping a large sum of money in a savings account? Wake up and earn better returns on the idle money lying in your savings account. See how Ankit suffered. Ankit had 1 lakh rupees in his savings account. He received a return of just 2,700 rupees on annual basis at a rate of 2.7%. Whereas, if he had invested in a fixed deposit for a year, he would have earned a return of 6,975 rupees at the rate of 6.8%. By investing in FD for 2 years, he could have earned 14,888 rupees at a rate of 7%. And by investing for 3 years FD, he could have earned around 21,341 rupees at 6.5%. Fixed deposits provide a higher return than savings accounts for a specific time limit.
The Reserve Bank of India began increasing interest rates in May 2022. In the past 1 year, the RBI has increased repo rates by 2.5%. This is the interest rate at which RBI lends money to other banks. Due to the repo rate hike, banks have also increased deposit interest rates. People used to get 4.5% to 5% rate of interest on fixed deposits. Now, FDs are giving returns of 6.5 to 7%.
Fixed deposits are a good means for banks to collect money. Banks offer higher interest rates on FDs and make arrangement for money for a specific time limit. Banks kept the interest rates low on savings accounts and increased interest rates on FDs so that people lock their money in FDs. As per RBI's data, there has been an increase of 13.2% in FD deposits with banks in March 2023, whereas deposits in savings account have increased by approximately 7.3%. SBI is offering 6.8% interest on a 1-year fixed deposit, whereas you will get interest of 2.7% on keeping money in a savings account for a year. HDFC Bank is offering 6.6% interest on 1-year FD, whereas the interest rate on savings account is less than half of it, that is 3%. Similarly, ICICI Bank offers 6.7% interest on a 1-year FD, while you will get only 3% interest on savings account.
कम से कम पैसा सेविंग्स में रखें और अगर रखें भी तो स्वीप इन स्वीप आउट की फैसिलिटी अवश्य इस्तेमाल करें। स्वीप इन स्वीप आउट का मतलब ये होता है कि आप मान लीजिए सेविंग्स में मिनिमम 10,000 छोड़ के या 25,000 छोड़ के जो भी अलग अलग बैंकों का रूल हो उसके मुताबिक उसके ऊपर का जितना पैसा है वो ऑटोमेटिकली फिक्स डिपॉजिट में कन्वर्ट कर देते हैं। बैंक आपको एक बार अपनी जो इंस्ट्रक्शंस देने की आवश्यकता है, बैंक अपने आप सिस्टम जो है वो उसको फिक्स डिपॉजिट में कन्वर्ट कर देता है।
If you invest in FDs now, you will be able to lock in your money at high interest rates for the future. Even if interest rates fall, the rate at which you invest in FDs today will remain the same throughout the tenure. Do not invest all your money in a single fixed deposit. Instead, divide it into different FDs of different tenures. So in case of emergency, you will only have to break the FD that has the required amount of money. Similarly, instead of opening FDs in the same bank, open in different banks. This is because even if one bank faces a crisis, you will not lose all your money. Deposits of up to 5 lakh rupees remain protected in case the bank runs into crisis.
Do not keep more money in your savings account than that you require for 2 months of expenses, especially at this point of time when the interest rate on FDs is higher. It is better to put it in an FD instead of just keeping it in the savings account, just like Ankit. This way, your money will remain safe. Adding to that, you will also get better returns. You need to make a decision on FDs quickly, because in the monetary policy meeting in April, RBI kept the rates unchanged. It is being speculated that interest rates will not increase anymore. So this is a good opportunity. Before the bank starts reducing the interest rate on FDs, you can also invest in corporate FDs. You can get higher interest rates there also.